Well, that's where machine learning comes in. We don't do a whole lot of, we don't discuss the machine learning algorithms behind this, but a big portion of it is to try and mitigate that volatility. So, you know, we have to understand what the risk is, the risk, what we're going to call the transaction risk. So for those of you who don't know, the transaction risk is the risk that when you try to execute a trade, you fail to execute it. In mitigating transaction risk, there are 2 points. One is the speed or the latency. So on the latency side, we're always looking to increase that. In certain cases, if it's happening in the cryptos exchange, so our pure crypto-to-crypto exchange, we're going to have exceedingly low latency because it's all in the same private space and it's effectively co-located. And I would say that we're going to get down to low milliseconds there. Now, when we're trading out towards other liquidity providers, there is additional latency, and we're always trying to minimize that. But you know, your question is, how do we avoid how do we avoid the volatility? A lot of it comes down to the predictive algorithms. So if we feel like the risk on the FX is much higher, we'll price that into the algorithm. So the SOR on the back end, it makes use of machine learning. For example, you know, let's say we're talking about that ETH BTC trade. If ETH is streaming down, then we're going to increase the confidence that we're going to be able to execute if we're buying, but we're going to decrease the confidence and we're going to assume a higher impact cost or a higher transaction cost when we go to calculate whether that match is possible. So that's really how we do it. That said, there will be cases where we miss that, and as we are the counterparties on both sides, you know, what we'll do is we'll just have to eat that loss. But I can tell you right now, you know, markets are massively volatile. We're already doing this in real time, and it's already working. I think part of the reason is we spend a lot of time working out the real nitty-gritty of making things like fill and kill really work, right? So again, we're going to get into a very technical discussion, but you know, I don't think we want to go that far into that. But know that we spend a lot of time on working on the specifics of execution, particularly for external liquidity providers.